there's the potential for still higher prices this week in the S&P market. Today's December 2nd, right around the close of the market. And as we anticipated last week, the market rallied and it went up pretty much straight up. It was up about 5% off the low, and it went up every single day of the week, which is about as good as it gets. And we also expected that there'd be a high in early December. We still think that. And that high would be followed by a decline in December, potentially at least 2 weeks of December. The first 2 weeks could have some problems, and we're still expecting that. So nothing much has dramatically changed. But what has changed is there's a better chance that the low of November 20th is the low, and that the low of November 20th will not be taken out in December or January, and that we should see higher prices into the spring, never retesting the lows that came in on November 20th. So what that means is whatever started November 20th in this rally, the next decline in December is not going to go all the way back down. What would make it more clear is if we go further higher, further up this week until the 4th or 5th, or even potentially into the following week, a few days, we could still see new all-time highs in the S&P before this rally is done. And if so, it would mean that there's a great likelihood that we saw 5 waves up off the low, Elliot waves. If that was 5 waves up off the low, there's a pretty good chance the next down move, which should be happening in December, is likely to come down into the middle, at least the middle of December, the 15th of December. It's probably a 2 wave, if and only if we make new highs here, okay? But if we do, then it's very possible that January is going to be the beginning of an explosive up move that will take us to our final target in the spring. We're looking for April or May as a high point in the 7,600 area. And this is what's interesting about it is also one of the reasons that the market's been going down lately is because the tech stocks and Nvidia and such, Meta, they've all had a really tough time since October 28th. And everybody's starting to lose interest in the AI story as if it's no longer going to yield the fruits expected. But what we did a little work on NVIDIA, turns out it looks like the 49-week cycle in NVIDIA came in a couple days ago, and that 2 times that, 98 weeks ago, was also a major low. So it's likely NVIDIA is going to go back up again. It may not take the lead, it may not be as powerful as it was, but NVIDIA being restored and the tech prices continuing to go up over the next weeks and potentially months, this is it will pull the rug out of the doubts that were created from the most recent decline and the fear, which was exceedingly high on November 20th. I think the fear greed index was down around 5, which is almost as scary as it can get. And after that, of course, the market went straight up, which does happen when the fear and greed index gets that terrible. So we are thinking we're probably going to see a little bit more rally this week, taking us above the 69.55 S&P futures high, and that in December we'll come back down, and if so, we probably won't come back down that deep, and then we go up again. On the bullish side, we have a number of cycles saying we're going up. We have a 76-week cycle, it's 369 trading days. That calls for a high in May. And 3 times in a row, you see that high coming in. We have a 324-week cycle, which is 1/3 of the 18-year cycle, that also calls for a high late April or May. We have a number of other cycles that are also saying we're going up into the spring after potentially further decline in December, possibly early January. Okay? So there's enough evidence based on our short-term work that the market is likely to continue on up next year. However, what's really interesting is one of my students brought to my attention, last week what happened was the market went up every single day up into Thanksgiving. And if you look at the statistics in the past, that's only happened 14 times in the last 71 years. He showed a list of the different dates. And what's interesting is one of the dates in that list is 1986. And 1986 is one of the cycles that we've been discussing with my students. It's approximately the half cycle of the 80-year cycle. And it has been repeating quite well on and off for a couple of years now. And it agrees fairly well with the full 80-year cycle, which is one of the patterns that we have already talked about on our YouTube videos. And both of them, they both have different variations on how they go down. The 80-year cycle falls apart really fast in December, which is more dramatic. But the 40-year cycle has a decline in December, but it's minor. And if our market makes a new high this week or early next week, there's a pretty good chance the 1986 pattern is repeating, as well as the 1946 pattern. They both agree that from January on up into April or May, we go up, okay? And then what's intriguing about it is the 40-year cycle, which is 2 times 20, and the 60-year cycle, which is 3 times 20, and the 80-year cycle, which is 4 times 20. They all call for a bad year in 2026. However, it gets really bad after April or May. And if you look at the pattern in 1946 and 1987, they both have crashes in them. And the 1966 market, which is repeating, it's 59 3/4 years. It's not quite 60 years. That one's repeating, and that one is already down. But it also bounces a couple of times, and the times that it goes up in the middle of the decline match the times that the up move is exaggerated in the more bullish versions, the 80 and the 40-year cycle. So the bottom line is there's a really good chance next year the market not only will go down, but after May, it could fall apart fast. 2 of them have a low in July, and the other one has a low in October. All right. But it would be very, very cautious starting after April of next year to see a significant break in the market. Now, we're not expecting an 80% break, okay? We're thinking if we go up to 7,600, go back to 5,000, that's about a 33% break. It's still a huge break. And if we go to 7,600, everybody's going to be bullish. Nobody's going to be waiting for it or expecting it. So it'd be very surprising. And then the fear and greed index will be on the other end, 95 instead of 5, right? Oh, yeah. Also, notice that the seasonals are not working well this year. As a matter of fact, that this particular November was a 20% chance that would actually happen, and it did happen. And then usually there's the expression, sell in May and walk away. In other words, markets should go down after that. There's no money to be made. It turns out the opposite this year. April 7th, April 23rd were sharp bottoms, and the market went up ever since. So the seasonals have been kicked around. And the reason for that is an astrological event that happens every 11 and a half years, that the Saturn and the North Node are conjunct. They were conjunct on April 23rd. We anticipated there would be a pullback from December until April, if you go back to some of our prior videos. And that's happened before. It happened in 1990, and the low in 1991 lines up very well. 34 and a half years ago lines up with our present market very well, and that keeps going up, by the way. That at least goes up into the spring. So we have a lot of information that seems to support an ongoing rally. It's not straight up, although it would be surprising to most people if we made all-time highs this week or early next week before going down. It would change the whole sentiment. People would be wondering, whoa, what's going on here? And if the tech stocks start to pick up momentum again, even if they don't make new highs this week, which they probably won't, it's still going to change the storyline. And the Fed, of course, if they cut interest rates, I don't know if they're going to cut interest rates or not. I don't know if it's going to be 25% or 25 basis points or 50 basis points. But whatever it is, the likely scenario is the market will go down in December, no matter what kind of thing they do. And then it'll go back up after that, and eventually it'll become clear that this market wants to go higher.